Namaste, Sat Sri Akal and Adab. Welcome back to Mutual Funds for All. This is your host and host, Mr. Bond, welcoming you again. Welcome back, Priyanka Bada. And what's the question which you have for this month and this episode?
You know, gold is scaling new heights. So do you think gold is a good investment opportunity?
First and foremost, please understand that gold is not an investment. Did you know that?
No, you know, our grandparents have been doing it and so on. So.
Unfortunately, in the Indian household context, gold is an allocation because of the social taboos. So at the time of marriage, at the time of various ceremonies, etc., we need to gift gold. And that's the reason why gold becomes part of allocation of every Indian household. That's number one. So if you know that gold is going to be required maybe 25 years down the line as soon as your child is born, then why can't we start investing in gold based on your own social status? It can be 5 grams, 10 grams, 20 grams of gold per month. So 10 grams of gold is equal to 120 grams per month. 120 grams per annum, and it's equal to 2.4 kilos of gold in next 20 years time. That's how you accumulate gold, and at the occasions of marriage, etc., convert that by paying some extra, maybe making charges and all. So it's an household allocation, it's not an investment.
Okay. Because, you know, I started collecting, I started buying in small quantities, and I had built up quite a corpus, so to speak. But then suddenly when the prices went down, I got scared and I sold it all off.
You sold off?
I sold it off.
Wow. Now please understand, why did you buy this gold? Because it was required, as I said, for a specific reason, for a specific goal of yours. Ideally, when the prices are going down, so let's assume you were buying 10,000 rupees worth of gold every month, and this month you're getting 10 grams of gold. Next month the gold price falls and you get 12 grams of gold for the same amount. Should you be happy with 12 grams of gold or 10 grams of gold?
12.
Right? Yeah. So you put it in perspective like this, you realize that why you should not have sold. On the contrary, when the prices were going down, you should have continued buying gold, or maybe added on to it by accumulating more amount of gold for the same amount of money.
Right. But you know, I panicked, but now that you explain so well, and I know the difference between, again, investment and allocation.
Correct.
Maybe I will do that, or maybe not just invest in gold.
Just start your SIP in gold, because it is an allocation which you will need at some point in time. Yes?
Okay, thanks a lot.
Thanks, Priya, for being on our show. It's really been a pleasure having you. And I hope all our viewers have really benefited from the queries which you had raised in these last 4 episodes.
Thanks, Sunil, for having me on the show. And yes, all my queries have been resolved really well. Thank you.
Thank you so much, everyone. We'll see you next week. This is your host and host, Mr. Bond, signing off. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.